All right, Pack, welcome back to another video. We are in the new year. It is the second week. We are closing out of January already. So January is about half over. We're going to go over how the portfolio has performed so far year to date. We're going to go over what I've been buying, what dividends have rolled into the portfolio, and what was reinvested where. So welcome to the channel. If you are new here, I am Dividend Doggo, and I am showing you my weekly / overall portfolio review. This is going to be just the taxable account in M1 Finance. This is a bridge account meant to bridge the gap between being able to take money out of 401k and collecting Social Security for retirement. We are give or take about 20 years away from the traditional retirement age, where Social Security could be taken, about 20 years away from being able to take out from 401k funds. So we're trying to build up this fund, my wife and I, and we are going to show you our journey as we go buying stocks and the like. So primarily this is a dividend income portfolio, and we're just going to kind of go over some of the basics that you can see here on the screen. This account is with M1 Finance. These are money weighted average returns. We don't have some things in our portfolio that a lot of people who invest in dividends do, and we have things that some people don't. So we're going to go over that and show you exactly where we're at. So this journey with this portfolio started in 2019, originally about 2019, about June 17th or so, but it really didn't kick up into play until about August. So when I actually jump into the full portfolio, you'll see the numbers did change a little bit there, because I put everything into one particular pie for M1 Finance. So you can see I started really going heavy in August of 2019, and we've been investing in the market pretty consistently since. And then we pulled a little bit of money out in the middle of 2022 in a couple of stock positions, and then we've continued to just invest and dollar cost average into the market since. So as you can see here from the all-time numbers, we have about 153,000 in market gains, and we have about $61,519.93. That number is glorious. I'm so happy to see that number going up nonstop. It's one of my favorite things to look at and know that the portfolio is working, whether the market is red or green every single week. So I will go through the brief breakdown here of the pies. I will go into all of the pies in detail by the weekly review, but this is what the all-time review looks like. A large portion of money was taken out of healthcare and out of utilities in 2022. So that is why these numbers are so high, as well as you can see the impact of the market going down over the course of 2022 on several of the other pies here. So I wanted to just go ahead and show this real quick, and then we're going to get into, I'm going to do the year to date, and then we're going to go into the weekly review. So when I'm looking at year to date so far, since the beginning of January for 2023, overall the market has been extremely green for the portfolio. We've collected over $1,100 in the past 2 weeks of dividend income. That is absolutely amazing. This will be dropping into the portfolio here soon, and I'll be rebuying stocks with that money. We do pay the taxes on that money with our regular job income, not with the income that comes from the portfolio, meaning that the stocks that we collect dividends from, 100% of that money that the dividend income rolls into the portfolio, it all rolls in. We pay the taxes separately. So overall, very green, $14,000 in the green, total with dividends, $15,879. That is pretty amazing. If you look here, the only thing in the red right now for the new year is healthcare, which is AbbVie and Johnson & Johnson stock. But let's dive in. You can see finance has been doing really good. Monthly dividend stocks, that is primarily just BST. That is doing really good. And let's go ahead and break down the week's returns. Now, the first week coming back into the new year was obviously very good. This week it was in the green. We earned some dividend income and we had some market gains. So that's pretty fantastic. But several of the stocks are in the red for the week. The utilities, consumer pie, and healthcare. Now, consumer pie is just barely squeaking in the red there. But finance was definitely carrying the portfolio this week. It held up very, very well off of the news. I believe JP Morgan reported and things were better than expected, I think, overall. But let's break down by category here. So we will just start at the top with the Como Money Pie. The Como Money Pie is Berkshire Hathaway and SCHD, which is an income ETF essentially. And eventually I want the majority of the money in this portfolio to be in SCHD. That is why things are weighted the way that they are here. So overall, and there's a chance that I may add some to Berkshire Hathaway over time, but this is one of the only stocks in the portfolio that does not pay a dividend. But SCHD, I just like the way that it's diversified, the way that it selects stocks. I think that it's just a solid way to continue to add to the portfolio and not have to worry so much about where that money is going. That's why the weights are all set. 94% of the money going forward will go into the Como Money Pie, and then it'll even everything else out at 1% afterwards. So it has a lot of catch up to do. We're talking several $100,000 to get this up in order to get to these numbers. So finance had a great week. We earned some dividends. I believe that $98 is Bank of OZK probably coming in. That'll be dropping into the portfolio probably within the next couple weeks. And overall, very, very good. $6,100 for the week. Had a great second week into the new year. That means we're probably due for a nice red week next week. I am currently not investing in any of these companies, primarily because of the fact that I like the weighting where they're at right now. In fact, eventually I plan to trim some, especially from Citigroup. It is very much overweight. That was one of the stocks that I shifted money into in 2021 at the very end of the year. And I have a lot of regrets about doing that as far as taking the money out of the oil stocks that I had, like VLO, Chevron. I wish I had kept those. Obviously, hindsight's 2020. You can't do everything correctly all of the time, but repositioning my portfolio at the end of 2021 was definitely a mistake. So let's go in and let's look here. We did have in the consumer pie, it was just barely in the red. Home Depot was up about 4%, Lowe's up about 5%, Pepsi down 3%, Coke down 3%, Altria down 1.77%. Target was up about 2.7%, and Costco was up just barely 0.49%. Overall, doing pretty solid. We did get the big payment from Altria. I am going to show that. That is this right here. This was the payment that came into the portfolio for Altria, and it went ahead and bought an additional 27 shares of Altria. Now, I know that the stock is pretty heavy. It's got a lot of things against it, but I love the dividend yield of the stock, and I am hopeful for the future of them migrating a lot of their product line over into other categories. So I still like the fact that they have the Budweiser. I love a lot of different aspects of the stock, mainly that dividend yield. Is this the greatest buy for anyone to add to a portfolio right now? I would say Probably not. You should be well diversified before you make any smaller investments like this. However, for me, I wanted to go ahead and drip those dividends into the stock. I might do this for the next couple quarters. We'll see kind of how things shake out with the stock overall. So that was Altria. And the consumer pie that bought a hefty chunk of forward dividends, almost $100 in forward dividend income just by reinvesting those dividends, which is absolutely amazing. That's going to be really nice to roll into the portfolio over the next year. So let's get into healthcare. This was down the largest for the week. This is mainly off the back of AbbVie, although Johnson & Johnson was pretty red as well. Johnson & Johnson is one of those that I'm going to be following pretty closely this year, especially if it continues to go down like this. Definitely going to be looking to add a few $1,000s to this position, possibly double it in actual value and size. I have not put a lot of money into Johnson & Johnson, and it's just kind of been there in the back of the portfolio, just steamrolling along, earning dividends. And I know that this is one of everyone's favorites, dividend stocks, because of how long it's paid a dividend and grown its dividends. So it's definitely one of those that I'm keeping on the radar. As far as AbbVie, I trimmed my position very significantly in AbbVie last year. So if you go back and look around June in the video timeline on YouTube, you can see what I had done there with AbbVie. I took all of the money that I originally invested in AbbVie and took it out of the stock entirely. So I'm going to continue to hold AbbVie and collect those dividends from it. Let's go into utilities next. Utilities is VST and Duke. They were both not down all that much, about 0.5% and 0.19. Duke is one of those that I want to add to a little bit in the future and build that up. It's just been, in my opinion, pretty high and pretty expensive. Vistra also right now, in my opinion, is pretty high and expensive due to the debt that they have taken on over the past 2 years. This Vistra was mainly a play for me when it dropped down to about $16 to $17 a share is where I was buying it in early 2021. So that is just a hold position for me. I took the majority of the money that I had invested into that stock off the table last year. All right, so we left off with monthly dividend stocks. I got rudely interrupted by M1 Finance's auto logout. So we have a little edit in there, and we are going into the monthly dividend stocks, which is just BST. This position was up 7% for the week, which is pretty solid. It did earn dividends this week, $65. So that's going to be going right back in to buy more shares and compound this position. I'm really happy with the size of this position right now and the fact that it's going to continue to buy about 2 shares of stock every single month this year if I just leave it alone and let it do its own thing. There's a chance that I might buy a little bit more into this stock over the course of the next couple months, but we'll see kind of how that shakes out. I do like where this position's at right now. I don't really see... there's a chance that I might buy a little bit more in there, but not if it's going up by 7% in a week. So then we have the newest slice of the pie here. That is the industrial and railroad pie. We do have 2 things in here, Louisiana Pacific Corp and we have Union Pacific Corp. Louisiana Pacific Corp is a home construction renovation stock. They do siding primarily for housing and do a lot of repair work for housing. So that is one that I'm interested to see kind of how they perform over the course of the next year or two. But I plan on holding that for at least a couple of years. Union Pacific Corp, I think, is going to be one of those that's going to be a very key piece to hold. I'm maybe adding another railroad stock here, but I'm going to get this position built up a little bit more at the beginning of the year this year. This is one of those that I'm looking at that I want to have a few $1,000s sitting in the stock. I'd like to get it ideally somewhere in the ballpark of like 30 to 40 shares added to the position here relatively quickly at the beginning of the year here, so you can look forward to seeing that kind of build up as well. I'm also looking at adding a Canadian stock to the portfolio again. So we're going to be looking at that in the course of the next couple videos. It might be the next one. We'll see what we've got to play with and work with for the end of the month for extra income. January is one of the heavy tax bill seasons for me because of the real estate in Texas. We have different county tax bills for properties that are either paid off or have mortgage that doesn't have it rolled in to the mortgage payment every month. So we have to pay tax bills at the end of the month this month. So January is usually not a high contribution month for me, but we are going to try to get in there and build that up. We do have one other thing. I was going to show the this is what the income activity looks like here. You can see we had rewards redemptions. That's the credit card through M1 Finance. We earned $73 into the portfolio there. We had Pepsi payout and Altre payout, and BST did its buy on the 30th. So we did have one other buy. Let's see here. What was that? That was the afternoon trading on the 3rd. Yeah, that was BST doing its buy, and then SCHD for $200. This was the combination of that little bit of income that came into the portfolio, and I just want to continue to keep building up the SCHD position with the portfolio. So overall, that is currently how we're sitting right now for the week and the performance, and the year to date is looking fantastic for the start of the year this year. And I'm hoping that if there's anything interesting going on with the market this next week, that it creates some little buying opportunities. Like I said, I have a little deposit that I'm going to try to do this week. I'm going to try to build up a couple positions in the portfolio and possibly add a new one. So thank you very much for watching. We are at the beginning of the year this year. 2023 is going to be a very wild and significant year for the portfolio. Regardless of how the market does, I'm hoping to do a higher contribution level than 2022. We've also started re-adding to HSA accounts. We can now add to the other account, which is the F.I.R.E and M1 Finance. I'll do a breakdown on that next week in the video. And then we will also be doing 401k contributions as of this weekend. We're back to adding to 401k contributions, which they've increased the limit on that to like 22,000 this year, which is mind-boggling to me to think that we're going to try to shoot for that cap this year as well. So a lot of things going on, a lot of things to add to for this year. I'm really excited. We're in a new year and there's a lot to do, a lot of fiscal work for the year to do with the portfolio. And I'm excited to be buying and taking you along for the journey. Let me know if there's something specific that you're excited for or to buy in your portfolio for the year. Or just for the week or this month. Let me know how you're doing, and I appreciate every single one of you on this journey with me. Have a wonderful weekend, and thank you for watching.